Hey everybody, it is an exciting time for the real estate market. The market has been very, very slow for a long time. And today we are going to talk to one of my favorite real estate experts about it. He is Leo Pareja. He is CEO of EXP Realty, and he's going to be sharing his insights on the state of the market. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. It's the best way to support interviews like this. And you can get the top 10 stocks to buy right now from my sponsor, The Motley Fool. Again, best way to support this, what I'm doing on YouTube. And that link again is fool.com/Frankel. Enjoy. We are joined by Leo Pareja. He is the CEO of EXP Realty. Leo, thank you so much for joining us.
Hey, my pleasure. Glad to be here.
It's been a while. Unfortunately, the real estate market is kind of in this, it's just as slow as it was last time I talked to you in a lot of ways. So I want to dive in and ask you a little bit about the current state of the real estate market. So first off, real estate has been kind of, in my opinion, agonizingly slow since, mid 2022. Do you see more of the same in 2025, or do you see some relief finally on the horizon?
Yeah, no, that's a fantastic question that I think is shaping almost day by day. So I went on record at the end of 2024 saying that we were cautiously optimistic. So our prediction that we made in Q4 on several other on the record situations, we said that we probably are pretty much lined up with what Fannie and a couple of the other economists are saying, that we should see about 4.2 to 4.3 million resales, with new construction going from 700 to 750,000, which would give us about a 10% bump year over year. And again, predictions are fun because anyone can make one, and new information can pop up. So the transactional count is very much tied to affordability, which is probably one of your next questions with rates. So where I did stand at the end of 2024 going into 2025, and I feel the same way, is that I'm not expecting any big drops, right? So movement in a 25 to 50 basis point direction either way is what we should expect, kind of bouncing back and forth. So a couple of things. One is, I think consumers are now used to this new normal, Matt. They're not expecting, a 5% rate. So if you want to buy or have to buy or can buy, I don't think this sitting on the sidelines for rates to come down. And so affordability is a three-legged stool of supply, demand, and cost to borrow. So I'm still cautiously optimistic. Obviously, over the weekend, we received news about tariffs being applied to Mexico and Canada that could affect the cost of lumber and other very important supplies for housing. So very uncertain elements that we couldn't have underwritten in Q4 of last year going into 2025 could pop up. And always to remember that the rate is really tied to the 10-year Treasury, and it's still above historic averages with the yield spread.
So you had mentioned kind of the breakdown between existing homes and new home sales. So I kind of wanted to just kind of ask one quick question about that. Existing home inventories have been really at near record lows for a while. Existing home sales have been really low, but new home sales have been a historically high percentage of the market. I think I was reading about 33% of the recent sales were new homes, as opposed to about 10% in the normal market. Why have home builders had such an advantage over existing homes?
No, that's a great question, and you are 100% right. So new construction has been a bright spot on kind of home delivery, and it's for a couple reasons. One is we've been, first of all, we almost had a decade of under construction post the financial crisis because the lack of liquidity in 2009, 10, 11, 12. And so it took many, many years to get back up to where it should be. So new construction has the ability to be a more aggressive with incentives. So a builder can do a 3-2 down buy down rate. So what that means, if prevailing rates are at high sixes, low sevens, they could get that rate down in a 30-year fixed mortgage a full point or a point and a half, which is one very enticing incentive for a new buyer, and they've been very creative. What we've actually seen is a little bit of shrinkification. So the average delivered square foot of a house has gotten a bit smaller to keep the affordability more in line, right? So even as we've seen increases in cost per square foot in the last 12 to 24 months, builders are delivering, in some cases, a smaller footprint. So instead of having to go up with the cost of inflation and materials, they're still delivering a new product. And Matt, for the first time that I can remember, in some markets, new construction is equal to or even priced more aggressively than resale, which is not historically what happens. Resale always has a discount, or new construction has a premium, whichever way you want to explain it. But builders are being very, very aggressive and creative in how they deliver. And as a bright spot, the new construction permits and the supply pipeline is robust. So, we are actually hoping that new construction continues to be a bright spot in the housing economy.
All right, so I mean, you have I don't want to quote the exact number because I know I'll get it wrong, but I know you have a lot of agents under EXP's banner. It changes from quarter to quarter. Um, I'd imagine it's in a lot of ways a relatively difficult time to be a realtor right now. Would that be a fair statement?
So we are the single largest brokerage on the planet. So we're roughly 80 some thousand agents in 24 countries, with the vast majority of them being the U.S. and Canada. And yes, real estate has been tough. We've been in a steady decline of transactions since 2021. So 2021 is a peak year at almost 7 million transactions between new construction and resale. And then it's just been a steady decline. So from 2021 to 2024 is like a 40% drop in transaction count. In an industry where it's commission based and based on units, it's a finite game people play. So there has been a retraction agent count. What I have seen, and what I will continue to expect in 2025, is that the professionals will rise to the top, right? The most experienced, the most educated, the most knowledgeable in their marketplace will always have a role helping American families make one of the most expensive, most litigious and stressful decision of their financial lives. The average American moves 6 times in their entire life, 3 as a renter, 3 as a homeowner. And so in some markets, we've seen our very seasoned expert agents increase their transaction count, even as the year over year stayed flat. And so I think 2025, we will probably see a more of a steady state. The folks that couldn't make it didn't survive in the last couple of years, but the seasoned pros will continue to deliver a very high value service to consumers.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.